The stock market is never obvious. It is designed to fool most of the people most of the time, says Jesse Livermore, who is one of the greatest traders of all time. Today I'll be informing you on the history of the stock market. It's important to know basic information on the stock market because, for future reference, if you'd like to invest your money into a stock, you'll know the history of the stock market and the basics of the stock market and its background. I personally own a few stocks. I started recently last year when the market took a fall from the pandemic. In my speech today, I'll be informing you on the background of how the stock market works, the Black Monday crash of 1987, and the COVID-19 fall of 2020. Carlos Slim was a successful entrepreneur who once stated, "With a good perspective on history, we can have a better understanding of the past, the present, and thus a clear vision of the future." The history of the stock market continues to repeat itself and make history. The first modern stock trading was created in Amsterdam in the 1600s, when the Dutch East India Company was the first publicly traded company. The company employed hundreds of ships to trade their goods around the globe, but it wasn't cheap, so they turned to private citizens. These individuals invested money to support the trip, and in return, they would be getting profit while they would still continue to get their trade and profit as well. The purpose of the stock market is to give investors an opportunity to share in the profits of major corporations. For example, if a new company starts a coffee company, they would first get with major investors to help start up the company and then allow for smaller investors to also invest to see if the company would take off and become successful. Investments are always risky, so it can go either way. Either the company is successful or the company fails and the investors lose their profits. What is a stock and how does the stock market work? A stock represents the ownership of a corporation. The shares are collectively known as a stock. The stock market is quite complex to understand, but it's easy to clarify in steps. As Warren Buffett once said, risk comes from not knowing what you're doing. First, buyers place bids and sellers offer asking prices for shares of stocks. When their bid is close to the ask, the trade then happens. The difference between what buyers will pay and sellers will accept is called the bid-ask spread. Then, the stock price also represents the cumulative market of buyers and sellers, which in this case, they decide what the price will be. This is all based on supply and demand. In the process of buying a stock, if you decide to buy a share of stocks or sell a share of a traded company, you will need a broker. Stockbrokers are individuals or firms that buy or sell orders at your request. In exchange for executing your trades, the broker collects a commission or a fee. Brokers can be either discount brokers or full-service brokers. With each type catering to a different type of trading, a full-service broker offers a more comprehensive variety of services, often including investment advice, while a discount broker typically charges between $5 to $15 per trade, but usually doesn't provide personalized guidance for its least expensive trading services. The stock market's company impact on the economy allows businesses to raise capital to pay off debt, launch new products, and expand operations. This also lowers stock market prices, which is less wealth for businesses, pension funds, and individual investors. Companies can't get much funding for operations and expansions. When retirement fund value falls, it reduces consumer spending. The Black Monday crash in 1987 was when the U.S. market fell more than 20% in a single day. The reason for this crash was thought to be because of the computer program driven trading models that followed a portfolio insurance as well as investor panic. During this crash, people were scared of inflation and higher interest rates. Our most recent stock market crash happened last year when the government's reaction to the novel coronavirus. The cause of this crash was because of the reduction in the demand for the travel and the lack of factory activity. Finally, going back to Jesse Livermore's quote, the stock market can fool you most of the time, but it is not something to be fearful about. Getting familiar with the stock market is good to know basic information on. After this speech, we learned the background, how the stock market works, the Black Monday crash of 1987, and the COVID-19 crash of 2020. Thank you for listening.